let's welcome on board Sanjiv Bhasin then and find out what he's making of the market right now. Sanjiv, good morning. The talk of the town is Nvidia this morning, and Kunal was just telling me it was $2 as recent as in 2010, and now its market value exceeds the combined worth of both Tesla and Amazon. What could be that Nvidia stock here in India, Sanjiv?
Good morning, Aisha. I wish I knew so easily. And yes, that's history. So we all live in times which are very, very, exciting and changing, and you have to accept change. Just to tell you, Nvidia was $1 trillion 2 years back, and in 1.5 years, it's doubled from there. So, big is getting bigger, and that's why we are saying don't undermine the extent of change in IT, and that is so. If I had to say one stock which is closely remembering or may mimic that is Coforge. The recent acquisition of Signity Technology. Signity is an AI player, and it's very well placed in Midwest and North of America. And the recent acquisition gives them color all across America and makes them, part of the reassurance play over there. I think the prospects of this becoming a big play is very, very much on the anvil. As you are aware, the stock came down for the reason of the QIP, which they needed to fundraise. They had already made a provision that the fundraise would be taken care of debt. That was just a I think they've raised 10%. They've got a 10% oversubscribed, 10 times oversubscription because the price became so favorable. So I would put my money on Coforge, and I think that this stock can again revisit those levels of 6,000 once this acquisition goes through smoothly and the prospect of the business, because this will be cash accretive from day one. And I think these Signity Technologies could be a game changer for them as far as North America goes and their presence into AI-led business over there.
Okay, that's interesting. Coforge, a stock that you've liked for a while now. But what is that one large cap, Sanjeev, which you think could give us those mega returns in, say, the next 2 to 3 years?
So I am putting my money on HDFC Bank. I think all the pessimism and the over ownership is more or less plateaued. And if you are looking for growth, once CDR and deposit ratios start to do well, I think the lion's share of the business will come to HDFC Bank. So next 2-3 years, yeah, and you will not get a turn of tide so fast. But if you are patient, then you are getting one of the best banks, so the best performer in the last 20 years, available at very reasonable valuation. So that, according to me, is a large cap pay. And in my mid cap special is India Bull Real Estate. As you're aware, yesterday the fund which they raised as far as the QIP has gone through, and the funds are now coming in have come in the company. The company is going to be new named Equinox. It is purely going to be the flagship company for Embassy Real Estate. And Embassy, by the way, has delivered more commercial buildings and real estate of 2.9 crore than even DLF. If there is a next DLF in the making, it is India Bull Real Estate. Right now, it may look small, but I think in the next 2 years, it has the potential to become a mid to large cap stock over the next 2-3 years.
The other talking point actually, Sanjeev, is the massive heat stroke that we're seeing, and I'm sure you're probably melting away much as we are back home. But maybe if you don't want to talk about that, there's also other stocks that are in the spotlight, and then the likes of a Jubilant Food, for instance, as well. What have you made of the quarterly performance and even the kind of commentary coming in from the management?
Yes, Avan, it is really sweltering here. So no two ways about that. And with age now, the heat becomes a pain. And so I am in Bombay for the next 2 days, going to Nasik, and hopefully maybe better times over there. But I think even Maharashtra is going through a very, very, dry spell as far as heat goes. So humidity will be there. I thought Jubilant numbers are reasonable, but I don't look out for Jubilant. My top play there is Devyani, and I think Devyani has cushioned all the weaknesses of the provisioning. I am very, very confident on the way Costa Coffee is now eating into market share of Starbucks. It is increasing in presence in Pizza Hut, and the whole range of QSR is doing extremely well. So my money is on Devyani. It has been a slight underperformer, but that's the whole nature of the business. All of them, even the Jubilant numbers were no great shakes. I would rather buy a Devyani on the valuation multiple, and I think this can be a very, very sweet play over the next 1 year.
Sanjeev, a bunch of these, defense companies, of course, led by BEL, a stock that you like, have come out with a very good set of numbers. And I was just looking at Garden Reach numbers, for instance, as well. Huge margin expansion is what they've seen. Where is it that you still find opportunity to buy afresh? And more importantly, given the run-up that you've already seen in defense as well as railways, would you say that after a positive election verdict, these segments could go into some sort of consolidation? Or do you think they will further see a heightened uptick?
So Aisha, like I said, the euphoria will come if the election verdict is positive and PSUs will be on the charge. But you've already seen that the market is behaving very maturely. It is discounted that whatever the verdict, these are going to be stocks or sectors which are going to outperform. But the valuations, Aisha, unfortunately, leave no place for comfort. Whether it's a Hindustan Aeronautics or a BEL or a Bharat Dynamics, all three are in our portfolio. We see no room of safety of numbers on the upside. We think everything good is priced in. The government's budget and so on will be the force here. But if you are looking for a regular play, then doing a SIP will be better. But I would not say go whole hog at this price. There is a left out feeling, but we have selectively booked profits in PSUs, particularly some of the our doublers and triplers in the metal space, Vedanta, Nalco, Sale. I mean, these have been huge outperformers. So we've taken some chips off the block. We would rather sit on cash or get into blue chips like Lever, Marico, HDFC or Coforge. So we are reshuffling. To sum it up, Aisha, I think just nibbling in right now is okay. And if you do a SIP, it's reasonable. But to go whole hog in any of the defense or railway stocks would be a little bit overrated because the price is not in your favor.
Okay, clear messaging coming in there from Sanjeev. We'll let you go on that note, Sanjeev, though I must warn you, it's no better here in Mumbai at least, because the humidity coupled with the heat makes it even worse than New Delhi. So brace yourself.
Thank you, Aisha. But stock market makes you very resilient. In fact, the COVID, in COVID, everyone gave awards to the whole world of safety. They did not give me any award because I was coming to office every day. I was a COVID warrior. I was fighting my way through all the things, and despite that, trying to bring a cheer on the faces of people. So for stock market participants, weather is part and parcel of the life. But thanks for the warning. However, look forward to being and having tea with you in Bombay tomorrow.
Okay, great. Indeed, essential services had no option. But
if you like this video, then like, share and subscribe to ET Now.